Hello and welcome. My name is Jesse Durham. I am a coach at the Cash Compound. I am live with you today, Thursday, where we go through a cash coaching hour. I'm in Greenville, South Carolina. I'm here to answer your questions about this concept called the infinite banking concept. It's a way we say here in-house for you to be able to save and spend money at the exact same time. So as you're tuning in, I can see where you are from. If you'll put that in the comments, whether you're on TikTok, whether you're on Instagram, you're on YouTube with us, wherever you're tuning in from, love to hear where you're from. Feel free to put that in the comment section. But again, my name is Jesse Durham. I'm somebody who has just personally implemented the idea of becoming your own banker for going on 10 years now. And I'm a professional in this space, helping people all across the country save and spend money at the same time. So I'm looking forward to talking about what that means, how you do that, best practices, answer your frequently asked questions around this idea. Okay, Nelson, greetings from Texas. Well, here's what I wonder. Just because I have other friends, Nelson, too, in Texas, are you in the part of Texas that's actually been getting snow recently, or maybe not? That's just a follow-up question for you, just because I'm curious. I have pictures that I'm seeing on my social media from folks that are getting snow when they're not used to getting snow where they're at in Texas. But appreciate you being here. I know that you're frequently on, so if you have any new, fresh questions, make sure to let me know that as well. If you are seeing us for the first time, and okay, no, Dallas-Fort Worth, gotcha. I got you. My wife's from that area. I'm born in the Dallas-Fort Worth area. So cool. Appreciate you listening. Appreciate you tuning in. But if you are finding us for the first time, you're getting value from getting your questions answered or learning about how to be able to keep more of the money that you're earning, make sure to subscribe. Make sure to follow us wherever you're tuning in from. And let me know. I see that Nelson's on YouTube. Love to hear where you're from. Love to hear where you're tuning in from. Let's start a conversation about keeping more of your money. Let's start a conversation about being able to save and spend money at the same time. And I'll tell you a bit about myself. So when I was introduced to the idea of saving and spending money at the same time, it was 2015. I was building a business. My wife had just given birth to our second son. We had a lot going on in the family life, a lot going on in the work life because of those reasons, right? And I had a friend that invited me to see the concept. I had a friend that called me up and said, Jesse, I heard about this idea of becoming your own banker. There's going to be a guy in town. So this was an in-person event that I went to where I saw a fellow show from the front of the room how he paid off right at $1 million in debt. That spoke to me because I currently at that time had student loans. I had a family car note that I was paying on. We had credit cards. And I saw a way for us to be able to get out of debt like this gentleman had gotten out of debt, but also at the same time be saving money. So I saw a way to be able to save money in a great place, in a great way, and to be able to use it at the same time, spend it at the same time. Blew my mind. That started a waterfall of epiphanies and breakthroughs. And we just decided to implement that concept from that time, paid off the student loans, paid off the credit cards, paid off that family car. And we've done a lot of amazing things since learning how to save and spend money at the same time. So that's a bit of background on me. Navigate your ventures. I'm used to seeing you here on the coaching consultation hour with us as well. Appreciate you being here. Denver, Colorado. No doubt there's plenty of snow in Colorado. All right, Nelson, let's get to your question. How do I make my money work for me instead of it working for the banks? Man, I don't know if you don't already know enough just by how you worded that, of course, but just being at a point of asking the question in that way is such a good starting point. There are two ways to earn money, just two. One of those we're very accustomed to, which is go to school, get good grades, right? And then you start in on a career path or you launch a business, okay? But you go out and you work with your hands, your time, your skills and abilities, expertise, etc., right? Which is a valuable thing. I believe that bringing your gifts to the marketplace for the benefit of others, that mutual exchange, beautiful thing. So we're aware of that way of earning money, going to work. but putting money to work, I don't think we're taught that in schools. I don't think we're taught that in home. I don't think we're learning that from churches, okay, from our peers, etc. So the best way that I know to put money to work, Nelson, with guarantees, with access, privately, with tax advantages, and several more reasons that I'm happy to go over. The ideal place to put money first is into a properly structured whole life policy, whole life insurance, but it needs to be from a mutual company that pays dividends. Now, that's a really specific answer, okay? But just look at it as a box, okay? So just think about you earn money, however you earn money. And it comes into your life, it goes out of your life, you're earning it, right? So where do you put it? So we know that it's going to flow, right, through our hands, right? But where do you put it? Okay, where's it going to go? If there were some box, okay, that you could put that money in, I'm just trying to visually do something here. If there's some box that you could put that money in first, okay, whether that's under the mattress, whether that's a savings account at your bank or credit union, wherever it is that you want to put that, wouldn't you want there to be as many advantages to that box as possible, knowing good and well that you still get to go to the box? And I don't know what page that I put that money in. While I'm trying to give you a visual here, which is going to be funny and laugh at me, but wouldn't you want as many advantages as you could? I'll probably just have to pull out another bill. Here we go. You'd want as many advantages there as you could to that box. Now, if it's an actual box, all right, a shoe box in your closet, could it be stolen, that money? Could it burn to the ground? Is it going to grow in that kind of a box? No, it's not going to grow in a literal box, right? There aren't going to be tax advantages, et cetera, there. If it's a savings account, that's a step up perhaps, right? Because you could get some growth on that, but you still got access. But then the attributes, the advantages tend to cease from that point moving forward, right? So I've mentioned a properly structured whole life policy as the ideal place to be building your capital, to be saving your capital, because it has more than a dozen advantages, more than a dozen characteristics that I'm aware of, and I've named a few. Hedge against inflation, privacy, guarantees, control, easy to manage, several advantages. But here's the kicker then, Nelson. This is my box, right? So I still have, as the owner of this box, I have access to capital from that place to where I could do something like I shared with my story just a second ago. I could take that money and go and pay off a debt. I could also pay for my next family vacation. I could also take that and invest that. I could do whatever it is that I want because I have that access to capital. That's one of the attributes of this place, the whole life policy. So I get all the benefits of that asset, of that policy, where I get to save my money and yet I still get to spend it. So long answer, perhaps, Nelson. Let me know if that was helpful. Ask a follow-up question, you or anybody else that's tuning in. I just want to be able to do multiple things with my money at the same time. So that's the way that I suggest you learn about making your money work for you. Remember, 2 ways to earn. You at work, all right, people at work, or money at work. When I experience cash flow in my life and money comes to me, however it comes to me, I want it to go out and accomplish multiple jobs for me. I want it to be growing. I want to maintain access. I want it to be private. I want it to be a place that's easy to control. I want to have all these advantages of contractual guaranteed growth, compound growth. That's what's going to happen there. And yet, because of that access, I still get to the money and go out and do things. Okay. So I love your question. That was a pretty lengthy answer. But again, we're teaching people here at the Cash Compound to save and spend money at the same time. So we want to be able to save that in the policy as it's described in this book. So here's my strongest recommendation during this cash coaching hour is to get a hold of this book that's called Becoming Your Own Banker by a man named R. Nelson Nash. It's on the back cover right here. I read this book back in 2015 after I saw that presentation on what infinite banking was. I was encouraged to read the book. I went out and I read the book for myself. And that's been my financial manual ever since. So that's my strongest encouragement to you, is to get a hold of that book. You can find links to it on our website, actually. So it's on Amazon. You can listen to it. You can get a physical copy like mine. This is like well used. You can see that on these corners. But let me know what other questions you have about personal finance, infinite banking, saving and spending money at the same time. Let's hear it. All right. Navigate Your Ventures on YouTube says, I love how you guys correlate the HELOC to starting your high cash value whole life policy. Yep. When you boil the question down to what asset is ideal, a HELOC comes pretty high up on the list, right? Like people love a HELOC if you can get one. And that's a big point that I would bring up right there, is if you could get a HELOC, right? Because you got to apply to ask for that. And then maybe there's fluctuation, maybe there's a diminishment in your access to capital there, because here recently, if you guys are watching the news, there are a lot of ups and downs in the marketplace, and banks do funny things at hard times. But it is a good analogy to look at cash flow to and from a place. I just have decided that for myself, and I own several. I own currently, as of this date, 6, and we're looking at our next string of policies as a family, which is really exciting. So I own 6 whole life insurance policies. Y'all, I've paid hundreds of thousands of dollars in whole life policy premiums. I'm going to say that again, because if you don't know anybody that's doing infinite banking, that's a ridiculous statement to make. And I'm not saying that to be braggadocious. I'm saying that to say that I practice what I preach. I've done this concept for going on 10 years now. I've paid hundreds of dollars of premium to whole life insurance policies that were specially designed, specially built for owning and using for infinite banking. I wanted to save and spend my money at the same time. All right. Navigate Your Ventures says, basically buying a house for your cashes, yes, whole life, and be able to use the equity of the cash value. Yes, I love it. So all these words are important to really understand. Equity, access, the question of assets. Again, personally, I've decided that a policy is the greatest financial asset, where I want to warehouse equity, where I want to experience growth and compounding and access and have it on a contractual basis. But I love hearing your feedback there on how the HELOC example was helpful to you. What fresh questions do you have? Let me know where you're at in your journey. Have a policy and you're doing infinite banking. Don't have a policy yet. Still vetting the process, learning about the process. I want to be able to address you and best help you wherever you're at. And I can share more of my journey along the way. I'll tell you a bit more, because I kind of brought up the subject just a second ago, that we have several policies currently. We've been doing this for going on 10 years now. And we've done things like pay off debt, finance family vacations. We've done some real estate deals. We've paid taxes using our private banking system. We've done all kinds of things. Now we're at a point to where we're at the point of looking to add to our system. So much like commercial banks are all over in y'all's towns, like Nelson, they're down in Dallas, right? They're down in Fort Worth, Texas, just like they're where I live in North Carolina, just like they're here where the office is in South Carolina. Banks open up multiple branches. Banking as a business is the most profitable business that I'm aware of in the world. And that's why they have many, many branches to these banks and these credit unions and such, right? So when I started on my infinite banking journey, where I was going to privatize my banking, starting from learning about it in 2015, I have since opened up branches of my private banking system by buying more of these policies to be able to do more banking. And we're at a point now to where we've done that for 10 years, growing the system over time. And 2025 is a year of reevaluation for us, where we see the option and the ability, and we're ready to pull the trigger on opening up new branches. Because as I get more of these policies for myself, that means that our children are eligible for more. And it's just a really exciting time. If that makes sense to you, great. I'd love to hear your nuanced questions about infinite banking. If that didn't make 100% sense for you and you've not yet seen our introductory presentation on what infinite banking is all about, everything that I'm saying about policies, everything that I'm saying about this book that I've encouraged you to read, everything that I've been saying about how to save and spend money at the same time. If you've not watched that presentation, you need to watch that presentation. You can go to thecashcompound.com. Is going to be your resource there. And then the next encouragement that I would do for you is say, go check out our Infinite Bankers Facebook group. So that's a community where people that are learning about this concept, people that have implemented this concept, professionals in this space, everybody gets to weigh in, ask questions, share best practices. It's a great community. If you're on Facebook, look up Infinite Bankers. We'll ask you a couple of questions, of course, to let you into that community. Real simple. And then you can be learning from those best practices. You can be seeing other people's questions. It's a great place. I'm going back to you because I appreciate the engagement. Navigate Your Ventures. And I love that I can see that you're tuning in from YouTube. We've got a ton of stuff on YouTube, everybody. This is assuming, no, let me start up at the top. So you first say, as a full-time business owner, is there a workaround to get an additional policy, such as having a large amount of cash in my bank account while applying? All right. And then it looks like you might have a follow-up on that, which is, this is assuming you don't have tax returns that reflect how much more I earn now compared to previous years. Oh, I love the complex question. So let me start at the end and work my way back if I can. When you're applying for a policy, that's actually a place as a business owner. Here's the dance that you're dancing as a business owner, right? So you want to, in a way, report kind of only the income that you have to, because you have, and I'm not giving advice, y'all. I'm not giving advice. This isn't investment advice. This isn't tax advice. There's no kind of advice. We're just having a conversation where I'm answering this question. You're wanting to dance the dance, right? Of being able to show these write-offs for tax purposes, but you're wanting to be able to show a strong financial standing. You're wanting to do both those things at the same time. Okay. Now, when it comes to applying for insurance companies run off of, basically your age and then either your network or your income that you can show. That will determine how much you're eligible for. Okay. And that's why it's so important that you work with somebody who understands infinite banking, so that policy can be structured and what is available to you can be structured in a way where you can maximize what it is that you want to do, because everybody's only allowed, a certain amount of insurability. And when you're wanting policies built for that high cash value, like you were talking about in your comments, the structure of that policy matters. And then the income that you can report, of course, matters. So hopefully that's helpful on that back end. Glad to have you here, Jadu, answering questions about business owners that are implementing infinite banking and some considerations there. So it's really fun to have that kind of a nuanced question. So you want to be able to show strong income to be able to get as many policies as you want to get, typically speaking, right, in general. But then also, if you have a large amount of cash, like you're talking about in a bank, can that be incorporated with how that policy is built? The answer is yes there. So that's some of the answer that I want to give you. Make sure to ask a follow-up question if you want. I see that Keith is joining us as well.
Let's let him in, shall we?
Yeah.
Jesse, I'm glad it has been a profitable conversation so far for Navigate Your Ventures.
Yep.
Who was here with us last week. Welcome back. Nelson, a regular on our coaching afternoons.
Mm-hmm.
Love to see it. So some of you have realized we start this late after noon, somewhere between noon and noon 30 East Coast time, because I lead another call. Sometimes Jonah's on that call, but appreciate you guys being here with us all the time for this coaching hour. So Keith Carter's on the call as well. Let's answer Nelson's question and then have Keith introduce himself. I don't think he's been with us on this live in a couple of weeks. Nelson says, refresh my memory. Can we put that on the screen? I think our producer over there. It is. Okay,
Yeah,
great. I can't see it.
Refresh my memory.
Refresh my memory. How soon can a policy be put in place after the initial process? Nelson's out here asking questions that make no sense again. What do you mean?
See, you wouldn't have got that response from
No,
me,
you wouldn't
Nelson.
have. But Nelson, hey, Nelson knows how it's going to be with me. Hold on. So, no, Nelson, soon can a policy be put in place after the initial process? What you probably mean, but clarify, because I'm that way. You know what I'm going to say, is that application and underwriting is a part of this situation. That's probably what you mean. So if you're ready to start a whole life insurance policy from a mutual company that is fully underwritten, which they all are,
Mhm.
that process, I always say, in the vernacular, it's going to take 3 or 4 days, or 3 or 4 weeks, or 3 or 4 months. So all that means is I do that to simplify what's going on in the application and the underwriting process. This is
Yep.
life insurance that we're going to use for the infinite banking concept, the save and spend system. So we got an application to figure out, 20 questions about your health habits and history. And then we have the underwriting where the insurance company is going to take on the risk. They're going to decide. They're going to look at criminal history. What? Yeah, well, that has to do with the risk they're putting in place on your mortality, your criminal history. They decided to add that in there. Driving history. Okay. Now, this is not a credit check for all of you who think I just said that, but it is a background check for several different things. Mostly health. Mostly it's health. So what does your doctor say about you? What does your age say about you? What does your height and weight say about you? So 3 or 4 days, if you're young, super healthy, and you're real purdy, 3 or 4 days, they probably will expedite you through, use AI tools, and say, hey, we don't need to do a health exam. Got it, Nelson? If they're going to do a paramedical exam, which is typical, normal, it's what we call 3 to 4 weeks. They may have one question about what came about your standing on a scale, peeing in a cup, your little blood pressure, little pinprick, right? They may have a question in there, but that's probably 3 or 4 weeks to have your policy in place or enforce active policy you can use. And number 3 is if you got the neck, the back, the sugar. Some of you Southern folks know what I'm talking about.
Why are you looking my way?
Your
Keith's on here, too.
your people are so Southern. Keith's people are so Southern.
Keith's
actually.
like an ox, though.
Okay, so if you have the neck, the back, the sugar, you had the COVID 4 times, you're missing an eye, you've got some form of hypertension going on, 3 to 4 months, if they have to call your doctor or look at medical records because you were in the military and you already know the VA cannot find them and doesn't think you were ever in the military, it's going to take an entire quarter for your policy to start. Then you'll have it for life, right? We're normally talking about whole life insurance or sometimes term that's convertible. And when we're talking about that, you got it. For a long time, you ain't got to call them back and ask questions. Yep. Now it's in place until you pass away. So that's kind of what's going on. Nelson, hopefully that answered your question. I'm going to be sarcastic and short at the beginning for those people who don't want the long form answers. But when you want the long form answers, I hope that I gave you the idea. Once your policy's in place, cash value is going to be there. We're designing custom policies on purpose around here. So there will be cash values available. And we're going to use it. We're going to use it as soon as you want to.
Mm-hmm.
Keith, why don't you give us an introduction, man? You haven't been on the coaching calls with us in a little while. We're so happy to have you. Believe you've been practicing this concept near 9 years at this point. Tell us about your journey, who you are, where you're from, and how you use your policies.
Yes, thank you. Name's Keith Carter II. I'm called the Insurance Engineer. It's my brand in this space.
Can you guys hear him out there? Nelson, can you hear Keith?
Test. How's my mic?
We hear you, Keith. We're just wanting to make sure that the tech is getting it out to everybody.
Keep talking, Keith.
Okay, fair enough. And first came across the idea probably about 9 years ago. And first policy, I got that next year.
You guys got it?
And yeah, that next year, studied it, looked at it for about a year before I finally pulled the trigger on that. And since then, it just made a lot of sense. It's made a lot of sense. I've been using it myself for actually in my household, we have 4 policies, and in my family, we've got 8 policies. So we're building up that system of policies as we go. I was sharing it with people. I just thought it made a lot of sense. I understood enough to know that the risk was so low and the upside so great that it could help anybody. And then it got to the point where it was, well, shoot, I'm already doing it for free. it's something I already enjoy. Might as well get licensed and, do it at a higher level. And that's kind of where we are now. I've been licensed since 2020. Just been teaching this as much as I can and sharing it and using it in paying off debt and investing and improving your lifestyle. I think the three kind of criteria I have for, a policy loan is like, hey, is this going to improve my quality of life or maybe the quality of life for others? Is this going to help save me money or is it going to help make me money? And that's kind of the criteria I kind of use for using policy money.
Love it, Keith. I appreciate you, Nelson, letting us know you could hear him. We were not sure at the beginning. So, Keith,
Cool.
The most interesting thing that I think that I heard, Jesse will probably ask you some clarifying and questions as well about how you go about utilizing the save and spend system in your family, was 4 in the household. Did I hear that right? But 8 in the family. I love that. So tell
Right.
us about some of the other people who've adopted this outside of your 4 walls.
Yeah, so my mom has a policy, my sister has a policy, and my niece and nephew, they both have policies. So that's 4 through them, and then 4, I've got 2 on myself, 1 on my wife, 1 on my daughter, who is 18 months old today. Yeah. So my mother, she believes in me. And once I got it, she got it. I just think she started her first policy at age 55, which is not old by any means. But sometimes you talk to people and like, oh man, I'm 50, I'm 55, I'm 60. Would this still work for me? Would it still make sense? And I just talk about her experience. She has an RV. She spends a lot of time in Florida with her mom. My grandma, and she used a policy loan to buy a spot at a really nice park for like a year or something like that, or half a year, and she was able to use that. And I think she bought a scooter. I'm working with her right now to put a plan in place to pay off some of her debt, to help her cash flow. Fortunately, she was a firefighter and was able to retire at like 50 or something. So that worked out great for her. And for
Love
us.
that.
You're right. I do love that. I do love getting the real life stories of, hey, here's what mom's doing.
Yeah,
right?
she started hers at
Because
55.
it's your mom, but it also fit those categories that you said of, hey, is this a lifestyle improvement that I'm going to get to make by using money that I've saved and spent, right? I'm going to spend it on this scooter that I want. I'm going to spend it on, going out and getting this place where I can be closer to mom, visit with mom and things like that. And then, when she transitions to using policies for debt, she's going to start keeping more money. And then that's less money that's leaving her life. That'll be an improvement to level up what she's already doing, which is just awesome to hear about, man. I love it. Now, I was telling the folks a little bit earlier in the call, and let us know what your questions are. We're just sharing where we're at, personally and professionally helping folks implement this concept of saving and spending at the same time. But this seems to be a year for us, JD. I'm really excited that I will probably be getting the next policy on my person.
Oh, yeah.
And then that's, of course, going to mean that we can get the next string of policies on our children.
Yes. So you're upping what you have in death benefit. That's some technical stuff there.
Okay.
At the
I got a
same
question
time,
for you.
it's general here. General, ladies and gentlemen, remember, we are always here to walk and talk you through the next step, whatever that is. Nelson's next step may be completely different from a business owner out there, or Keith's family's next step. But the next step for you, Jesse, is probably throwing out some ideas for, wait, I can get more than one policy on myself. And I read into that, of course, we're having a dialogue that's supposed to help other people, that's going to allow you to be able to get more insurance on your kids.
Yep.
So walk us through some of that. Well, just whatever you want to jump in.
Yeah. So what I've told the folks so far is, and I'm telling this to you, Keith, because I love hearing about, what's going on in your world, and I'm sharing some of mine, is that we've implemented this concept for going on 10 years. Our starting point was getting one policy because I saw a way to save and spend money at the same time. And for me, that starting point was paying off debts. So we used that first policy that we started saving our money in to pay off the family car, to pay off the student loans that I have, to pay off credit cards back then. And over time, we got a policy on my wife, which allowed us to do more of that saving and spending, allowed us to do more banking. And then we got policies on our children as we had children. And we've just been growing and scaling that system, and it's been around 6 policies for a while. And it just looks like this is the year to take that next step of just scaling up what it is that we've already been doing, just to grow that, to compound that, and get another branch of our banking system. That's what I told the folks a minute ago. Banks have multiple branches. We've been buying multiple policies. For me, I can get another one. And if I get one, that means that it makes sense to go ahead and take the next step for the next generation as well. All of our children currently have policies, but we'd be able to get another policy on them. So it could be 4, maybe 5 policies at a go, because that's
awesome.
is what the next step could look like for us.
That's awesome. Congrats.
So
Man.
I'm excited
That's
and
cool.
anxious.
Yeah.
Right. We all are. We're committing to long-term thinking.
Yep.
That's right.
And long-term thinking and planning. The first word in the save and spend system is save, right?
Mhm.
So are you going to be disciplined and courageous enough to plant the seeds that grow for your family for 3 to 4 generations, right?
Yep.
We got to think about this. When Jesse, you've got kids that are, still in the house. What are their ages?
Yeah. 5, 9, 11.
5, 9, and 11. And all of the science out there says, and who knows if we trust in the science or not, that's a whole different podcast, that the policies you buy on them might pay out to their grandchildren,
Right.
right? Very likely that these kids, hopefully, prayerfully, live a long, healthy life. You're long gone. And when they pass in 100
Don't you laugh at
years,
that, Keith. You can't laugh at that part. Don't you laugh
Right.
at me being gone.
when they're gone in 100 years from now,
Methuselah,
or
man.
whatever that may be, right? When they're gone in that 100 years from now, you and I are gone. I'm not trying to live to 140 years
God,
old.
I'm not trying
Okay.
to be 135.
Yeah, right. Yeah, that's my back hurts now. Okay, Nelson, how you feeling? Okay, their grandchildren, maybe great grandchildren, will be
Yeah.
around to reap the benefits of a legacy play while your kids have been using the policy for expenses and debts and opportunities throughout their life. This is long-term thinking. So premium, as Nelson would say in this book, hold it up for everybody, Jesse.
Yeah.
Remind everybody where we start.
Becoming Your Own Banker by R. Nelson Nash.
The premium is the answer.
Yes.
What we decide to save, what we decide to keep, when Jesse and his wife decide this is the year, let's up the game with another banking branch, that this is a century of change, a century of influence on the Durham clan.
Absolutely.
Love that. All right, we got something from Nelson out here. Maybe it's for you, Keith. Throw it up on the screen for us. Thank you. When getting a loan on a policy, Keith, if you're still out there, we may have lost you there for a second, but we can answer. When getting a loan on a policy, Nelson asks, does the loan have to be paid off before doing another loan? Love that question. Nelson is asking it for at least the 5th time. He has asked this question before. We're here for you, Nelson.
Yep.
Oh, Keith is back?
Yep, I'm
Okay,
here.
lots of people wonder this. Keith, help us
Yeah,
understand.
so I got you. So this is another really cool part about what we do and how we do it, especially with a banking style policy, the type of policies that we use, and also the method in which a loan is created when you request a policy loan. It's not an installment loan like let's say you take a loan for a car with the credit union. You can't pay half of that car from the credit union and take the quote unquote equity that's not actually yours and go pay for another car. You can't do that. But fortunately, with your policy, you are the banker, you make the rules. You're able to, let's say you do take a loan out for yourself, $10,000 for whatever you wanted to use that $10,000 for, and you start paying that back. And now you have $3,000 paid back into the policy, and you have another need or another, something that's going to, improve quality of life for yourself or others, something that's going to make you money, something that's going to save you money, and you have an opportunity and you need $3,000, you do not have to wait until the full $10,000 is paid off or whatever the entire loan balance that you have outstanding in your policy is. You don't have to wait for that. You're able to take that right then where it is, as it is, and use it, request another policy loan, and do what you're going to do with it. So there's an extreme amount of flexibility in the way you're able to use a policy loan. And no, you do not have to wait until that last loan is paid back. So good to go.
Mm-hmm. I love that answer.
Nelson,
That's real life for you too.
Yeah, Nelson,
Right.
Hopefully that's helpful for you. Remember what we're doing here. Nelson, the way you've asked a couple of questions today make me think and remember some people think outside of, well, the last question you asked was, I don't know, I'm juxtaposing some thinking patterns that I might be correct on the way you're going about this. Remember, this is life insurance we're using as a bank. The insurance company does not care, call it, or understand your banking performance. That's you, man. You're in charge. Do you have to pay off a loan? No, loan is cash values, equities, a lien against the money they owe the Hollins family. So if you don't pay the loan off, they give you the rest of the death benefit after the funeral, the homegoing service, right? So remember that, Nelson. We are utilizing the policy for the banking function, which is a verb we're trying to say. You get to be in charge of that and control that completely. One day, they will pay off the loan because they owed you money. And if there was outstanding dollars at that time, which I fully plan to have outstanding dollars at my death.
Yep.
I need money.
We're using money.
I need money.
Yep.
Okay, Nelson says, excellent. Thank you for the feedback, my friend. We always want to know if we answer it, no matter how harsh, curt, or sarcastic I started off with. We do want to make sure that you understand what's really happening. Ladies and gents, remember the conversation always continues on Infinite Bankers Facebook page. So that is a private page we control as coaches at the Cash Compound. We'd love to answer any questions you have in there. Folks like Nelson love to be live. We love that you're here. We like the feedback. We are talkers here. We are educators. Some of us train professionally as educators, but we can always answer the questions that you have in the DMs, in the comments, and definitely on the Infinite Bankers page.
And you get to see insights like what Keith was sharing right there about his mom. Other folks from that community are in there sharing their best practices, or they're asking questions and they're saying, well, hey, I did this. And it's a really great way to speed up your learning curve.
Love it. I'll talk about something else here. We have a few minutes left, I guess. I was able to, in my journey this week, yesterday, I got my dividend projections on two policies that renew. In car insurance, renewal is scary. In health insurance, renewal is scary. In whole life insurance, renewal is not scary because cost is fixed.
Right.
When I think of renewal for car insurance, I'm thinking it's going up.
You know what's
right?
coming.
Yeah, I know what's going up. Whole life insurance has a fixed cost. Okay, it is a level premium. Cost does not rise. So my premium doesn't ever have to change. So when I get close to my renewal anniversary, we just call it anniversary around here. They're going to send me, hey, this is what dividends we think you're about to get based on your cut of shares that you have with our company. And number two, based on like how much you put in today and tomorrow. And if you got outstanding checks coming in, like you may get a bigger bump. But I got those papers yesterday. So those of you who don't realize, we utilize mutual insurance companies for this process. And a mutual insurance company allows you to be a shareholder. No stockholders buying things on the exchange where President Musk is tanking it right now, or however it works. I don't know. They don't call me. But I do know cash values are up.
Yep.
Dividends are up. And dividends buy more insurance for me, raising my death benefits and giving me more flexible cash to use for stuff. So I got two policies that I started on me and the missus in 2021. I believe hers was 2021. I think mine was. I'm trying to remember now. I got all these in my head.
Sounds like they got a few years of maturity.
Yeah. They have a few years of maturity, but they were both around the very same amount of premium. And no, these are 2017 policies, I think. The ones that are renewing May.
Fantastic.
Yeah, but based on what I had, they were saying, hey, we think your dividend is going to be about $220 on each of these, I think. Going off the top of my head here, live coaching people. We're really doing this. Key's mom really is flushing her toilet down the septic system at an RV park right now.
Pay for from a policy.
Yeah.
Not today.
So
not today.
I'm trying to remember, but I think now, Jesse, give me this one here. How much insurance, paid up insurance, do you think $220 buys?
Ooh.
Because I don't know. I'm like, I'd have to.
I'll say $1,200.
I think that's probably a pretty good guess. We'll go with it. So remember, dividends are typically going to be allocated in your policy to be, we use this term carefully, reinvested into your system. Got to be careful about using the word invest. Some people get confused.
It's tricky.
Reinvested into your system automatically buying more insurance automatically, giving you more cash values so Nelson can use it to keep going automatically. So, yep, that's what's
Well,
going on.
how cool that you're able to talk with us and share your real life insights on, I'm seeing my guaranteed growth. I'm seeing these dividends that are just growing the system while whatever is happening in that bigger outside world.
Yeah, 100%.
Pretty cool to be sitting
You
here
guys
talking about
understand that?
dividends.
Any questions about your performance in the market? How many of you, raise a hand out there, double tap on the screen, let us know. Help me understand what you lost in the last week. Has anybody been nervous about their 401k performance, their
Probably lost
traditional,
some sleep.
their typical retirement plan performance? Yeah, did
Peace
anybody
of
have
mind.
a thought on that? Remember, cash values are up. Nelson says he couldn't hear the amount. So about 220, I think at least one, maybe both of those policies were getting around 220 or so dividend dollars.
Mhm.
They sent me that and said, hey, you remember when you used to play Monopoly? Hey, your dividends have matured. Like,
Yeah.
that's us every year, every policy. We're guessing on how much more insurance, paid up insurance
Yeah.
that buys. My death benefit will go up. Cash values will increase. Jesse's guessing maybe that'll buy about $1,200 more of usable cash.
Yeah, the answer is multiple. I mean, that's the answer, is that it's going to be a multiple. And dividends aren't guaranteed. These companies have paid them for over 100 years running without missing a single year. So that's awesome. But once they are awarded and you do purchase more, then it's guaranteed, which is amazing. And
Yep.
that just adds on that compounding.
Everything's going up. All that money is going to flow to my family throughout my life, or the missus during her lifetime. You know, when I bought it on her, you know, they're different people, multiple
And
policies,
then
just
the
like these
legacy
families.
play as well.
And then the legacy play has to
Yes.
be there.
Yes.
Has to be there. We win every time. Okay, so that's one other thing that I had said to our coaches. We have a weekly call where those of us who are on the internal team chat, have family conversations about best practices that we're having with other people, what are our clients wanting to know, what are potential consults asking us, checking boxes and saying, hey, I'm 60, I think Nelson is over 60, so is it different for me than it is for you who's 41? I'm going to do this amount of premium. I'm thinking this. I have debt. I want to go into retirement planning. All that stuff. And one of the things that I had to remind everybody out there with today on the internal side was everyone wins in whole life insurance. All the parties involved. Think about it. The agent is going to win. This was an agent call. We are talking about commissions.
Running the business. Yep.
Running a business.
Yep.
However, the client wins.
Yep.
With the use of this money.
Guaranteed.
Also, peace of mind. How many of you are interested in that after last week's stock market performances? Peace of
Right.
mind to know it's going to be there. The family wins.
Mhm.
Legacy play. Whole life insurance has to pay out. And the insurance
The
company
company
wins.
itself,
The insurance
for sure,
company
for
wins.
sure.
Everyone actually wins in
Yep.
whole life insurance. And
Yep.
what's an amazing marketplace anomaly, depending on what type of company you're talking about, or style of company, because of mutual dividends and performances there. Everyone wins.
Yeah, because of that mutuality, we can even improve on that relationship where everybody is a winner. Meaning, I was just describing how we already pay significant premiums, paid hundreds of thousands of dollars in premiums so far over the past 10 years, and we want to do more, which means that there will be more money that I'll be able to access over my lifetime. I'm winning, like you said. My
Right.
family will receive multiples of whatever we're paying in premium in the death benefit.
100%.
They're going to win at a greater level because I decided, hey, I want to do more of this. It's amazing. It's awesome. And then the insurance company itself is happy to receive more premium dollars paid as well. And then, of course, when they are profitable, like they have been, because we're trying to indirectly influence their profitability, we get more of those dividends that you were just talking
100%.
about.
Yeah.
Everyone wins. So
Very cool
Love that.
relationship, that mutual relationship.
remember, ladies and gents, that we have a YouTube channel. Find us at The Banking Bros. It's where my brother and I go live when necessary, like today. But also, we've got a suite of conversations from podcast style back and forth to teaching topics. One idea at a time, where we compare your savings and investment vehicles to the save and spend system, where we give you history lessons on what has happened, what is guaranteed and bound to happen in the future, and we talk about some of the numbers. Sometimes we just help you with some of that. And it looks like some questions today from Nelson, for instance, are all over the board. Maybe I want to know numbers here. Sometimes I want to know about history, health and habits. How does all of this affect what I want to do in the future? And I want the guarantees, the certainty. We all need to have a certain amount of certainty before we take the risks.
For sure.
And that right there is a big part of why we all put our money inside whole life insurance first. We need the certainty before we go to the marketplace and take on risks or ideas. We need to have something that we need to have a place to call home and come back to when some ideas don't work out, when we get sick, when we get lose a job, when the market doesn't do what we want, or we were too stupid to be good in that business and failed. We got to have a home.
And business itself has ups and downs. And Navigate Your Ventures was tuning in. Hopefully you still are on YouTube as well, asking good questions about, hey, I'm a business owner. What if I have this? What if I have that? So in your personal life, in your business life, when it concerns investments, that home that you're talking about, like, that's what finances all those things. Every household is run by financing. Every business is run by financing. All investments are made from financing. So I love that you just reiterated that whole save part of the save and spend system as a starting point. When you decide that you want to win with money by saving some, it's just the ideal place to put that in a place where you can do the financing for yourself. You do control that aspect. And then, of course, you can have the profitability like we've been talking about, guaranteed growth, contractual right to access, like what Keith was talking about, dividends on top of that, with Jadu mentioning that. Very cool.
Yeah, that's a really good point. And I know we were talking about, the everybody wins. And I heard it said one time that the best type of insurance is the one that's in place when you need it. And fortunately, the type of policies that we're typically using here, that's guaranteed to happen. It's guaranteed to happen. I was someone called, a mom story again. Someone called my mom up the other day, like, hey, we can get you 10 years of term for such and such dollars. And my mom's super healthy. We've got pretty good longevity in the family. She's only 60 at the time. And she just won a jump rope competition last week. So I'm like, oh, Mom, you don't need this. You have a policy that's going to be here forever as long as you keep doing it. What are we talking about here? Just send some more PUA to your policy. You'll be fine.
I love that. So
Yeah.
I want to talk about jump rope in here, but these people want to talk about
straight.
money, but that's great.
74 straight without a trip up on a jump rope competition. 60 years old.
I love that. I gotta be careful. His mom was a firefighter. She played college sports. I know that about. I met her. One time.
Miami.
Sometimes we get kind of bogged down in trying to share this story, or there's somebody like Nelson. Probably. Honestly, I've talked to Nelson a couple times here. Yeah. That's why I mess with him. But feels like he's on an island. I never learned this until I'm a fully mature adult. There's not people around me talking about it. I'm connecting with you guys, but like this hasn't been a part of my history, and my. Who's doing this? How do I know that it's real or something? Because I haven't been able to start yet. Maybe if that's you out there in the case. But what's interesting to me is I have all those same questions and those same concerns when I first start something. Mm-hmm. And one time, my brother and I planned for this big event. We have a room that we rent. We invited people. We make calls. We do things now on Instagram and Facebook to try to put the only person who showed up, one person. So we sat down and spoke with them and just drew lines on a page and walked through things on a laptop because we don't need to use the screen. It was Keith's mom.
Oh, very cool.
Yep. Keith's mom, only person that showed up. So
now she's living it out.
Yeah, now she's out here jump roping. Let's go.
Yeah, I see your question sounds of peace of mind.
All right, I love that. First off, so let's put it on the screen. Jesse, give it to us.
Yeah, the question you're asking is, what is our recommended cash on hand to start this system and begin with some cash accessible?
It's a good question.
I love it. Well, let's start with the second part because that's super quick and easy, which is you're going to have capital, money, cash available to you the moment we build you a policy. So the way we build policies and with the companies that we use, you're going to have immediately cash value that's going to be available to access. right away. So I use my first policy right away to start paying off debts in my life. So right away is the answer. My definite. So 30 days. Okay. Within 30 days of starting a policy, you're going to have cash available for what it is you're going to use the policy for. So JD, how about the first part of how much should they maybe consider having on hand to start the process?
Yes. Now, sounds of peace of mind. Remember that when we're talking about this, we are talking about custom contracts built this way on purpose. Okay, so this is not something you're necessarily guaranteed to get if you decide to go somewhere else. We're not saying anybody is bad out there, but there's 3 things that you're looking for. And I explain this on TikTok all the time. If you like TikTok or use it, follow us at either channel, The Banking Bros or The Cash Compound. Okay, great. And number 1, we're looking for a mutual company. We just went from 700 insurance companies in North America down to 70. We went to 10% of them. A mutual insurance company, so we get those dividends. Number 2, whole life insurance. That's capital W. Okay, it's not a throwaway word. Whole life insurance. Okay, so it's not universal for those of you who think somehow I just said universal. Whole life. Capital W. Number 3 is customized.
Walter Walrus. We homeschool our kids, so this is how they learn the alphabet.
All right.
So that W is Mr. Walter Walrus.
Got it. Capital W. Okay. And so Jesse was saying the policies we designed, the customized contracts, properly structured. You'll hear us say terms like that. And what we mean is we customized it on purpose for that. Okay. What is your recommended cash on hand to start this system? It's a great question, but that is not something we can fully answer for you. We're going to walk and talk you through that, and we will give you recommendations since you asked right here, right now. However, if you're going to have your own banking system, Sounds of Peace of Mind keeps commenting. I love it. So let me ask you a question, and as I talk this out, so hopefully we get an answer from you if you're still there. Okay, if you had a place and space in your backyard that could hold money, and it planted trees in the front yard, right? Money can grow on trees. That's the scenario we're in this world of AI and fantasy land. You can plant your income in the backyard, and it grows beautiful, thick trees in the front yard. Beautiful, thick trunks right away. It's going to be there after you're gone. We know trees last longer than people, big trees. And it starts growing money leaves right away within 30 days. And it gets better and better all the time. There's more of them as long as you feed that space and place in the backyard. And you can pick the dollars off of the trees in the front yard to go on vacation, to pay, try to figure out how to pay these taxes until Elon gets, hopefully in the next day or 2, he's going to get rid of the IRS. I don't know what he's waiting for. We're going to go on vacation with that money. We're going to do. So here's my question for you, Sounds of Peace of Mind. How much of the money that you make do you think you should be putting in that environment? If that were true, and this is how it works, and you could think about it, you wouldn't leave the money in the car in a check from work. You wouldn't put it on the front porch and let it blow away or the neighbor come get it. You could plant it in the backyard. It's going to grow beautiful trees that you can pick the leaves off of in the front yard for whatever you wanted to do, income tax free. And they always grew better and better. The seeds go in the back, the fruit is in the front. How much of your money are you thinking you're going to plant in the back? You get to do anything you want, but how much of it goes? If you put it in Bank of America, they don't plant you any trees, right? If you decide to spend it before you just cash it at the gas station and spend it, it's gone, right? Okay, so obviously there's an answer to that makes sense in my analogy, my scenario. What is our recommended cash on hand? Whatever you think you can save is appropriate, whatever you think you want to do. However, around here, we do not prefer to start adults less than $500 a month for banking style policies on purpose. We don't like that as much. We don't prefer it. We wouldn't recommend it per se, because most of the time, if we're going to start at that level or below, people are struggling to pay their bills.
Could be too close for you.
Yeah.
Yeah, it's your number to determine, but if we use that as a guideline, it's perfectly fine for you to say, you know what, I'm going to stack money for a month while I read this book that you guys are talking about, while I jump on this Facebook group, Infinite Bankers, that you guys are talking about, while I go and get on your website and watch that presentation video, I'm going to stack money while I educate myself for the next month, for the next year. That's up to you. Do what you want to do. But when you have enough of an understanding to know that you want to do this, that's my suggestion. Keep learning, stack money, and jump on our calendars, and let's have a cash consultation where we could actually talk about what all you have going
what's
on.
going on.
Like, that doesn't cost you anything. We
Right.
have these free cash consultations all day, every day. Jump on our calendar and let's take a look. I mean, we are here to be able to share best practices. Take a look at what you're doing, what you aspire to do, and speed up that curve.
Love it. Okay, throw it up on the screen. Sounds of Peace just came through with, I have about $6,000 a month to start my tree garden. Love it. All right, we just came up with a new analogy. We're gonna have to create content around it. I just don't have a lump sum available currently. You never heard us say that one time. Let me say that again. You never heard us say anything about a lump sum at all.
Yep.
Remember what I mean by that. Number one, it is possible. You have heard it from other people. You did not hear it from us. Number two, premiums in whole life insurance are level. They do not change. They do not require, it is insurance. Insurance has never required a lump sum. Car insurance, not a lump sum. Phone insurance, Asurion for your Verizon, AppleCare, doesn't require a lump sum.
Yep.
Your fire insurance for your home doesn't require a lump sum. Premium is fixed cost. If you would like to do a lump sum, we encourage it, and we'll walk you through that on a call. We'll help you understand the nuances of what's possible and how the contracts work. It is not required at all.
You're picking, do I want to pay this car insurance, whatever insurance? Do I want to pay that once every 6 months? Do I want to pay that once a month? So
Down payments, we call it down payment in real estate. Yes, a lump sum and then the ongoing monthly premiums, the mortgage premiums. There is no down payment in insurance. If you'd like to put it on extra, which we can encourage and walk you through that in an educational environment, just realize we never said that. People call me all the time.
Yeah. Now, if you have static funds, that's fine. I mean, that's why we
Yeah,
have those
sure.
consultation calls where we could structure the policy for
make sure you understand what's going on.
Yep. But some of my policies I pay monthly. Some of them I pay once a year, and I pick that, and you'd be able to pick that too. Sounds of Peace of Mind.
Yeah,
You could pick
you
that,
can pick.
and you could change that.
Walk you through it. Love to help you. What's your actual? Have you utilized any of our coaches? Are we working with you or somebody in our sphere at this point? Throw us a
know
first
where you're
name.
at.
Yeah, throw us a first name for you as well. Maybe, I mean, Sounds of Peace of Mind. You guys do realize that when you jump on here, unless you're Nelson Hollins, like I don't realize, oh, we spoke yesterday. Like
Right.
I don't know what your handle is.
Right.
So it's like, oh, this is my friend from yesterday. So, we'll help you with that. Keith, I want to ask you one question as we close out this afternoon here.
What you got?
Would be how much of your personal economy, how much of your, this is a personal question here, of the dollars that you bring in as a family, how much of them get placed in that spot in the backyard at this point? So last week, I think Joan and I both talked about these numbers. My number was around a third. About a third of all the dollars that come through my personal economy go into one of 9 policies. I think I was calling off the top of my head. I'm wondering how you're doing at building your banking system at this point. I know you've gotten married since you started. You've had a baby since you started. You've bought real estate since you started. You've had a life since you started. So where are you, man?
Lots of things have happened in the last 8 years, 7 years for sure. So at this point, we're looking at running it right now. We just had some income.
Is he on the calculator right now?
He's
Look at
literally
him.
doing it right now.
This is happening.
Let's go.
We're right around 30%.
Okay.
Right around 30%. Now, over this past year, with extra PUA and loan repayments, a much higher amount of total income has passed through the policy. And this year, it'll probably be closer to 40% based on trying to max out PUAs and certain policies. So, yeah.
Love it. So Keith was talking there about extra. So he's already doing a high percentage, a significant percentage. But then when you experience extra or you are paying back loans, then that's on top of that. Very cool. I'm over half. I'm at a point where the majority goes into our system.
Love that for you.
Nice.
Teach me your ways. How do I get there?
I'm working on it,
These
man.
kids, these bills. My goodness.
I'll always looking to level up.
All right, love it. Okay, ladies and gents, appreciate you being here for another cash coaching session on a Thursday, noon to noon 30 East Coast time. Most of us are in that space. Keith is in South Carolina as well. Jesse's in studio, but he lives in North Carolina. And we're here to help you with code cracking cash flow. Please do reach out to us in the DMs, wherever you like to communicate, on the Infinite Bankers page, and get yourself a cash consultation and find yourself a coach. Hone in on having this ongoing free conversation about your cash flow in the future. Nelson, I appreciate you always coming back no matter how deep I dig, my man. Love you, and glad that you're back with us. So we'll see you next Thursday, same bat time, same bat channel, for another great conversation. And if you're lucky enough, you might catch me on TikTok going live as a solo idea. Anything you guys want to say?
No,
As we
appreciate
cut
y'all being here. Keep learning.
Yep, good to go. Appreciate you guys. I hope you guys got something.
You are now tuned to the banking bro. Said we couldn't make it, drink up settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.